Okay. Now, I have already explained, I think I've already explained um, dividend model side of cost of capital, right?
Mhm.
Where I share the dividend formula, the cost of capital, the cost of equity formula using dividend model. Is that correct? Yeah.
Yes.
Okay, good. Okay. Okay. Well, okay. Did I mention something about dividend yield, earnings yield? Can you remember?
Yes, you mentioned something about that. You
Okay,
need
good. Okay. And I said about dividend, cost of capital, there are two formulas. There is one KE if dividend is constant, and there's another KE if dividend is growing.
yeah.
Um, good. And I said we have to know whether if dividend is constant, it's going to be this. If dividend is growing, it will be this. And I mentioned growth rate, how
Yes.
to calculate growth. And we have that. I said we have two methods: average method and Gordon's
Good
method.
on. Yeah.
Okay, and I explained Gordon method. Okay, good.
Yes, you explained average and
Okay,
Gordon's.
and Gordon
Yeah.
method. Good. I think.
Yeah.
Okay, good. Now let us go to a question. Like let's look at the comprehensive question to uh solve it. I'm not sure I did any comprehensive questions respect to that. Look for ICAN question November
Okay.
2018. Yeah,
November
November
20.
yeah, November 2018.
November 2018, what number?
Yeah, November 2018, question one.
Mm, yeah, the Echo
Okay,
PLC. Uh,
yes, yes, a co PLC. So let us begin. Let's begin from the requirements.
okay.
Yeah, okay, go on.
Okay. Requirements. It said ignoring the project, calculate the current work of Echo using one, the capital
Okay,
asset pricing method, which is capping. Two,
okay,
the Gordon growth model.
good. Can you see? They said we should ignore what? The projects,
Yeah.
that we should calculate current. You know why they are speaking that way? Because if the project is like the way the company is going to be diversifying, you would want to be looking for proxy company. So that is why they are saying you should calculate current work. So whatever it is current in the business, forget about the project. That's why they're sounding like that. Although they don't even need to say ignore the project. Once they say calculate the current work, it is different from a work that is suitable or specific for the project. So that's why they sounded current work, because the new project has not started. Okay. So whatever work they have is still going to follow with the normal thing they are doing. they've been doing. So they said we should use capital asset pricing model. We should use Gordon model. So we are going to start from Gordon model. That Gordon's growth model is dividend model. We saw Gordon's when we were learning about dividend model. Is that
Yeah,
correct?
yes.
Okay, good.
Now,
Okay, okay, good. Let us go to the story. Okay, you can read.
Echo PLC, Echo, is a
Yeah.
listed company in food retailing sector and has a large stores in all major cities in the country. Echo's board is considering diversifying by opening holidays travel shops in all of its stores. At a recent board meeting, the director discussed how the holiday travel shops project should be
Okay,
appraised. The sales director insisted that Echo's current weighted average cost of capital (WACC) should be used to evaluate the project, as majority of its operation will still be in food retailing. The finance director disagreed because the existing cost of equity does not take into account the systematic risk of the new project. He said that the company's overall work, which reflects all the company's activities, would change as a result of the project acceptance. The board
okay,
was also concerned about the market reactions to its diversification plans. Although board meetings were scheduled at which Echo's advisors would be asked to make a presentation on the project. You
okay,
work for Echo's advisors and have been asked to prepare information for the presentation. You have established the following. Echo
okay,
intends to raise the capital required for the project in such a way as to leave its existing debt to equity ratio by market value
okay,
unchanged following the diversification. Extracts
okay,
from Echo's most recent management account are shown below.
okay,
Statement of financial position as at May 31st, 2017. We
okay,
have the ordinary share capital 10 kobo per
okay,
shares at, at 233 million. We have the retained earnings of at 5,030. We
okay,
have the 6% redeemable debenture at a nominal value redeemable 2021, which is 8,900. We have the
okay,
long-term bank loans interest rates 4% at 635.
okay,
Then on May 31st, 2018, a coast ordinary share had a market value of 276 kobo excluding gains and the equity beta of 0.60. For the year ended May 31st, 2017, the dividend yield was 4.2% and the earning per
okay,
share was 25 kobo. The return on the market is expected to be 8% PA and the risk-free rate is 2% PA.
okay,
Echo debenture held had a market value of 108 excluding interest per 100 nominal value on May 31st, 2017, and
okay,
they are redeemable at par on May 31st, 2021. Companies operating solely in this holiday travel industry have an average equity beta of 1.40 and
okay,
an average debt to equity ratio by market value of 3:5. It
okay,
is estimated that if the project goes ahead, the overall equity beta of Eco will be made up of 90% food retailing and 10% holiday travel shops. Assume the income tax rates will be 20% for
okay,
the foreseeable future.
okay. Good. Thank you. Now, let us look at how we can solve this question. We are starting from A Roman figure 2, all right, which is using Gordon growth model. Okay,
Yeah.
now, so what are they asking us to calculate? They are asking us to calculate WACC.
Yes.
They are asking us to calculate WACC.
Mm-hmm.
Okay, good. Now, and what's our WACC formula?
Our
WACC
work from
is equal to
yes.
KE
Mm-hmm.
VE divided by VO plus KD VD 1 minus C divided by VO plus KP VP divided by VO plus and so on. All right,
Yes.
that's our WACC formula. Now, so what are the things in this? Um, what are the variables in this WACC formula we need that we need to get from the question? Starting from KE, how do we go about it? What is the equity? So equity, we need equity side. So I'm going to label it like, okay, equity.
Mm.
Good. What is the market value of equity? That is the market value of equity.
Mm.
So if you go back to the story, what is the VE? What is the market value of a co, the current share price of a co from the question? Are you able to identify it?
Right. One second.
The current share price is is just immediately after the balance sheet. What do you have? The current share
Okay.
price,
Is it you, the current share price you have 276 kobo.
276 kobo. That is 2 naira
Naira
76 kobo.
76 kobo. Yeah.
Good. Now, multiply it by number of shares. How do we get number of shares?
Number of
How do we
shares
get them?
is
Yeah,
number of shares is meant to be 233.
good. Uh-huh. Just 233 million.
Mm,
Uh, I am with you. Just
yeah.
233.
Yeah, just
233 million. No, it is going to be 233 million divided by 10 kobo.
oh, okay.
Do
But
you understand?
why we dividing by 10 kobo if you don't mind me asking?
Okay. This is what I'm trying to tell. This is what I'm trying to say now. I am saying that I am saying that your shares, your share capital, all
Mhm.
the share capital that you have, they are 50 million naira. All the share capital that you have, it is 50 million naira. Then I now said one share is 2 naira. How many shares do you have?
Sorry,
Total
come
share
again.
capital. I said
Okay.
the total share capital that you have is
Yes.
50 million naira. I
Okay.
now said one share
Mm-hmm.
is 2 naira.
Mm-hmm.
Total shares, all of them, 50 million naira. One share is 2 naira. The capital of one share is 2 naira. How many shares do you have?
Okay. So, yeah,
Yes.
we have about 25.
You have what?
one share is 2 naira,
One
and
share
we
is
have
2 naira.
and we
All
have
the 50
fifty
million
million.
naira. All the
Okay, naira.
shares are
That is
all the shares
25 million. It is divided by
exactly.
two.
Yes, that is 25 million shares. So for them to get 50 million naira as capital, they must
Mm.
have done 2 naira per share multiplied by 25 million shares. That is how they got to. Do you understand?
Mm-hmm.
Do you understand?
Yeah.
In this one too, before they could get 233 million naira, they must have done one share is 10 kobo. They must
Mm-hmm.
have done 10 kobo times something to get 233 million naira. Do you understand what I'm trying to say?
Yeah.
That is why I didn't just want to do it like 233 divided by 0.1. That's why I'm putting naira. 233 million naira divided by 10 kobo. So is exactly as it is. Okay. You are saying that you bought you bought some iPhones. And you are saying that you
Mm-hmm.
bought some iPhones for 500 million naira,
Mm-hmm.
and you bought one iPhone at 2.5 million. One
Mm-hmm.
iPhone at 2.5 million, and you bought a lot of iPhone for 500 million
Million.
naira. Then I
How
am now
many iPhones?
asking
How
how
many
many
iPhones
iPhones
did I buy?
you-
Yeah, I
is
get it.
exactly that's what we are doing. Do you understand?
Okay.
Now,
Yeah, I get it.
so now please note, examiner will not give you number of shares. They won't say, number of shares of this company is 233 million shares. No. What they will do is that they will say the capital of the company is 233 million naira. One share each is 10 kobo, and
Mm.
that's it. They will not even ask you the number of shares. You are the one who needs the number of shares because of the question they have asked you.
Uh,
Because we
Yeah.
want to convert the 2 naira 7 kobo, 76 kobo into a total. That 2 naira 76 kobo is for one share. So how many shares do this company have? That's the issue here now. Please, another thing is this. You may need number of shares. You may get it from earnings per share. If I say earnings per share, for example,
Mm.
is 10 naira, 10 naira. Earnings per share is 10 naira.
Mm-hmm.
Total earnings after tax is 500 billion. Do you understand? Or
Mm-hmm.
let me say, yeah, 500 billion. Total earnings after tax is 500 billion. Then earnings per share is 10 naira. With those two, how do I get my number of shares? I eh, I will say yes. I will say if total earnings is 500 million naira, earnings per share is 10 naira. So how do I get my number of shares? Very simple. It is total earnings, which is 500 million, divided by 10 naira.
Mm.
That will give, do you understand? 500 million naira divided by 10 naira. That will give me
Wow.
number. Do you understand? That's like
Mm-hmm.
50 million shares. Do you understand?
500 million divided by 10. Divided by
Yes,
10 naira.
yes.
Yeah, that's 50 million.
That's 50 million. What I'm trying to say is that before they must have done 500 million naira divided by 50 million. That's how they got earnings per share. Per share. Do you understand?
Mm-hmm. Mm-hmm.
This is what I'm. Hello? Do you get me?
I get you, yes, of course.
Yeah. So I am trying to say that you would need number of shares. Examiner will, you may the way you just get it from share capital, you may use earnings per share and total earnings after tax to get it. You may use dividend per share and total dividend to get it. If dividend per share is 1 naira and total dividend is 400 million naira or 300 million naira, so what is the dividend per share? Do you understand? All I will just do 300 million naira divided by 1 naira. So
Mm-hmm.
total number of shares is 300 million shares. So that's how I got number of shares in that regard. So I just want you to be aware. Do you understand? Just be ready for this. So what do we have? So if you do 223 divided by 0.1, that is
2000.
2230, 2330. Yeah,
Yes.
multiplied by 2 naira 76 kobo.
That's 6,430.8, which is 6,431.
6,430.
431.
Okay, approximately 31
Yeah.
million. That's the number of shares. Then we now need KE. We have gotten value of shares, equity value. We now need KE. KE, because they said we should use Gordon, that means there is a growth rate somewhere. So we are going to use the KE formula that speaks to growth rate. Dividend of year 0, 1 plus G divided by market price X div. You can see the market price they gave us is X div. Can you see?
XD.
Good. Now, we already have the market price, Abi. I'm
Mm-hmm.
picking the variables we have already. We already have the market price. We do
Yes.
not have we don't have the growth rate. We don't have the growth rate. Okay.
Mm-hmm.
We
Yeah.
don't have the dividend yet. So among all these variables now, the only thing we have is the market price.
Mhm.
Do you understand me?
Yes.
So we need to find dividend and growth rates.
Growth rate. Yeah.
Good. Let us go on. Now, how do we get dividend? Calculation of dividend. They didn't give us dividend. You will see something that they gave us. They gave us dividend yield. Can you see it?
Yes. Which was
Good.
4.2%.
So we are going to use dividend yield. So dividend yield is equal to, what's the dividend yield formula? It is equal to dividend per share or dividend of year 0 divided by market price X div. Can you remember this formula?
Yeah.
Times 100. And I said this type of dividend per share this formula is the same thing with a cost of equity formula, constant, when dividend is constant. And I said the difference between this one and that one is that this one is speaking to dividend of current
Current.
now. But
Yeah.
that
The
one
other one
is
speaking to
speaking
future.
to future, although we are still using the dividend of current, but because they said dividend will remain constant in the future. So that current dividend we are stating in that place, in KE place, is still future dividend. Okay, good. Look at it. Look, this is the formula for dividend. You said dividend yield is 4.2 from the question. Is that correct?
Yeah.
4.2%. Then what are we going to say? We now say we are looking for dividend. Market value is 2 naira 76 kobo. So with this, we should be able to calculate our dividend, right? So
Yeah.
our dividend per share, it is equal to 4.2% multiplied by 2.76. What do we have? Okay. What's going to be our dividend?
That'll give us 11.592.
0 point.
No, 11. 11.
Are you sure? 4.2. Okay. That is, you did
Oh, it's going to be
4.2 is
0.42 times
yeah. I wanted to say 11 kobo. 0.042 times 2.76.
times 2.66. That is 0.11592.
Good. So you are still getting the same thing. It's just because you did not divide that 4.2 by 100. 0.1152, right?
Mm-hmm.
Okay, so this is the dividend.
590.
592.
Mm.
592. Okay,
Then you
let's just
multiply
say
it by
5.
100.
Yeah, let's just say 59. Okay, so this is 11 kobo. It's like 11, about 12 kobo. That's the
Yeah.
dividend. Do you understand? Now, we have been able to calculate dividend. And remember, what did I say we need in that KE formula? I said we need dividend and we need growth rates. Okay. Now,
Mm.
please, very quickly, if we have dividend, we can get retained earnings now. What is the retained earnings? Do you know the formula for retained? If you want to calculate retained earnings, which was the formula? Retained.
Guys, profit after tax minus dividends.
Good. Retained earnings is equal to profit after tax minus dividend, or earnings after tax minus dividend. Can I also say it is also EPS minus DPS? This is retained earnings per share, right?
Mhm.
Is that also correct?
Yes.
Yes. Now, how did you
Yes.
your profit after tax is the total earnings after
Earnings,
tax?
yes.
That is how they also got earnings per share. It's because they say profit after tax divided by number of shares. That's how they got earnings per share. Do you understand? So, but this
Mm.
is retained earnings on per share basis. This one, the first one is retained earnings based on total. All right. So, we have dividend, we have earnings per share in the question,
Mhm.
right?
Mhm.
How much is it?